It has been a difficult time for technical analysts in the sense that we were worrying it was rising too fast.
Hello Bruno, it's great to see you for the first time of 2018. So let's jump straight in with the US market. Can you tell us what's been happening?
Hi Jack, yes, sure, it's a kind of exciting time right now. Let's look at the S&P on a weekly basis. The January month has been fantastic for investors. Price have been rising 5 to 6%. And it has been a difficult time for technical analysts in the sense that we were worrying it was rising too fast. It was rising in a parabolic way. What is a parabolic way? It means that you can draw successive support trend lines always at a steeper rate of ascent. And that usually ends badly, but the question is when. We noticed that during that time, the VIX, which is in orange here on the chart, was still moving below 11% and approaching these long-term red descending trend lines. And that just touched it on Friday, but did not break it yet. Also, the momentum on the lower part of the panel was accelerating. The MACD was even at higher levels, not seen for a long time. Also, the stochastic weekly was overbought for 3 months. I mean, a very long period. All of that was really kind of extraordinary. So now something is probably happening.
So how far down could a correction go?
Well, if we look at the daily charts, we notice that basically from 2700 to 2675, that was the consolidation area in December, the flat part. We had a straight rise, and this straight rise is basically not interrupted by any short-term strong support consolidation. So there is no support, nothing to hold until 2700, which is kind of low. That means that the usual retracement level that we take, for example, 50% at 2773 or 62% at 2750, they probably may not hold very long until we really create a base at the level that we mentioned at the end of December.
So we're aware of what was behind the parabolic rise?
Well, again, it was the FANG and also the leading sector, which was NASDAQ. And we see exactly the same pattern from the beginning of 2018, a straight line up, no strong correction at all. And we see also on the upper part, on the green dotted line, that NASDAQ was outperforming the S&P 500. So that was really the technology which was leading and taking with it the whole market and the large cap market.
So were there any other warning signs?
Well, if we look carefully, maybe in hindsight now that we started the correction 2 days ago, it looks like the small cap here on the top part were not making a higher high on Friday, despite the fact that the Dow made a higher high. That was one element eventually of small warning, and the relative strength was also declining for quite a while. So it was only the large cap which were rising. That's usually a sign that that's the end. Also very short term on the Dow Transport last week, even though we made a higher high on the lower part of the charts here on the Dow Industrial, on the Dow Transport, on the top part we did not make a higher high. So there were kind of a little warning signs.
Mm-hmm. And was there like a pause in Europe and Japan that sort of anticipated the US top?
Well, people didn't look at it really carefully because of the relative strength of Europe versus S&P 500. It was going down, so it was kind of normal, if you wish, that the market was not making higher highs. Indeed, it did not last week, and it had stopped also close to the 3,700 resistance area by mid-January. So, in fact, if we were looking only at Europe, we could have said, okay, the correction should be coming soon. but people were mesmerized by the US market. And if we look at Japan, kind of a similar situation, even a little bit stronger on the side of Japan, but also a relative strength, the dotted line down there, up there, which was coming down in black. And also another warning was the orange line, which is the strength for the yen going up. And we know that when the yen is stronger, that's not too good for Nikkei. So that was explaining basically why the Nikkei was going sideways. Now it's probably going to correct back to the former zone of consolidation, November, December, around 22,500, 23,000.
Has this correction also reached emerging markets?
Well, emerging markets were outperforming even the S&P 500, and that's what we see on the upper part of the panel with the rising black line, rising strongly, especially in the last part of December and January. And we see also the steep rise, almost straight line up, of above the former resistance of 2015 that we see on the left part of the charts. Most probably it will pull back to that level, and then if it can rebound, the uptrend will continue, but that will be the key factor.
Mm-hmm. And are there any kind of safe assets that we should be looking at in the coming correction?
Yes, just before we switch to gold, I forgot to mention India. I mean, we noticed also that India was doing well, except in the last part of January with a smaller, slower relative strength, the black line making lower lows. That was a leader all of 2017. So that probably is telling us that also emerging markets, which are really high risk equity market, could also undergo a strong correction if the S&P correct as well, a 5% correction. Mm-hmm. Gold is a safe asset in the sense that since all of 2017, on the right part of the chart, we have a kind of an ascending long-term triangle. So there is demand always at higher levels. It has stopped just right now at a key resistance level, 1365 about. That's probably going to go only sideways, even though it's overbought and not going to pull back much. What we need to check is really what's going to happen on the bond side. Because as you know, when equity correct, usually bonds move up as a safe haven assets, if you wish. Yeah. That's not the case right now. Since the beginning of January, yields have moved from 245 to 265, even 275 in the last 2 days. So even though equity have corrected, yield in the US 10 years have moved up. That means maybe there is a new correlation. We should be monitoring that in the coming weeks because that will be a new ball game.
Well, Bruno, thank you so much. It's always a pleasure having you here in our studio.
You're welcome.
And thank you for watching. And don't forget, me and Bruno will be back in 2 weeks. So see you then.